Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, June the 8th, 2018, and this is the daily report for gold and silver. Nominal moves in the precious metals markets as we are witnessing the quiet before the storm, and the storm, of course, is what we'll talk about throughout the entire show, and that's a trifecta of events, one which started today. Gold did close higher today, up about 50 cents at 1303.50. Silver has had a phenomenal week and ended up on the week on a positive note at 682. Fractionally higher pricing in the dollar index, 93.55. Fractionally higher pricing in the Dow Jones Industrial Average, 25,316, up 75 points, and minor moves in Bitcoin futures, 76.75 and 76.65 in the CBOE and CME futures exchanges. As seen through the eyes of this weekly candlestick chart, it is clear that gold did score some moderate gains on the week overall, opening up at around $12.96, closing up today about 50 cents higher at $1,303.50. However, when we convert our weekly chart to a daily candlestick chart, which I've just done, we can see that the majority of this week's move occurred on Tuesday of this week, with the remaining 4 trading days having nominal changes, although all green, meaning we have seen a series of higher closes throughout the entire week. In other words, what we are witnessing is the quiet before the storm. And of course, the storm that I am referring to is a trifecta of events which began today with the Group of 7 meeting in Québec, and then next week's historical United States-North Korea summit, and an announcement by the Fed as to their decision at the conclusion of this month's FOMC meeting, which will end on Wednesday. Currently, in terms of the FOMC meeting, there is a 93% probability that they will implement yet another rate hike. This according to the CME's FedWatch tool. What we can say about recent activity is not only have we seen pretty good support in gold pricing, but even more than that, we have seen pricing really be characterized with a series of higher lows, moving off of the recent lows that came in mid-May when the market touched at approximately 1288. Since that point, we have seen the market climb and now form a level of support at around 1300, which could have been a major level of resistance as seen by historical perspectives. In other words, we saw this particular area be a supportive area, and that, of course, was up until the major price break that occurred, taking gold pricing down $28 in a single day. Traders, while the outcome of these events are unknown, we can make a couple of assumptions. First, in regards to the G7 meeting, if in fact tariffs are in fact opposed and they don't come to some sort of an agreement, we know that historically speaking, United States tariffs have presented weakness in terms of the US dollar. The second thing that we are aware of is that as far as interest rate hikes go and its effect on gold, over the last 5 interest rate hikes, 4 of them have resulted in higher pricing in gold immediately following the hike. Lastly comes the summit between North Korea and the United States, and because of its historical first-time occurrence, there is absolutely no precedence and no historical data that we can look at to assume what the outcome might be and how that would affect the geopolitical climate. What we can say is that beginning today, throughout next week, promises to be a week filled with events that will dramatically shape and influence the future of our global economies, as well as the future of our geopolitical fabric. We are currently long gold roughly in this area with a stop in place. Therefore, my recommendation is to maintain your current long position in gold and to maintain your current stop. And traders, for the first time in quite some time, I am actually beginning to get quite bullish on silver. For the first time, we have seen the market move above these series of tops that were certainly a level of resistance. We are still looking at some real resistance at the 50% retracement that comes in roughly at 1695. And we have seen a sizable pop that was short-lived that came in just in April, so that we could be looking at another false breakout. However, if in fact we are going to move into an extended rally in silver, the beginning of that rally would look something like this. And traders, lastly, a quick look at Bitcoin futures as seen through the Chicago Mercantile Exchange's 5 Bitcoin futures contract. We absolutely have resistance in the market that is coming in roughly at 7,800. That matches up with these recent tops that we have seen and also corresponds with the 0.618% retracement level at 77.65. We also can say that our recent target as this market fell down, which was at 7,200, has in fact been reached and has in fact held. However, until we get a break on a closing basis above 7,800 or a break below 7,200, I believe we could see Bitcoin pricing remain in this tight and narrow trading range. Traders, it's not so much about events that have occurred this week. Rather, it is about events that began today. Of course, the Group of 7 met in Québec today. That will be followed by next week's major activity, the summit between North Korea and the United States on the 12th, and the conclusion of this month's FOMC meeting the following day on Wednesday. We could certainly see some major changes in the financial market as well as the geopolitical fabric based upon the outcome of these events. This has been Gary Wagner, wishing you as always good trading. We'll talk to you next week for another daily update and review. Bye-bye.